Hello traders, welcome to the video. In this video I want to be showing you a very powerful boom and crash strategy that you can use to cash a longer move in the boom and crash market or the volatility index market. So this strategy works on all markets. You can decide to check it on the volatility index market, check on the step index, check on the jump index, or any market of your choice. But here I'll be showing you example using the boom and crash market for my examples. So first, if you look carefully on my chart, this is boom 1000 market and this is the 15 minutes time frame. So in this strategy we are only using the 15 minutes time frame. We are not using the 1 minute, we are not using the daily, just the 15 minutes time frame. So the good thing about this strategy is you can use to buy and then you can also use to sell. So if you look carefully on my chart, I have just 3 indicators. I have the envelopes, which is this on my chart. I have the RSI, which is this level 90, 50 and 10, and I have moving average inside the RSI. Don't worry, I'll be giving you settings to these indicators and I'll be explaining how you can use them to cash a better trade in the boom and crash and the volatility index market. So to set up our chart, click on this indicator icon over here. As you can see, I have 3 indicators. To select the envelopes, click on the F icon on the main chart and search for your envelopes. Make the period to be 14, shifts to be 0, deviation to be 0.1. For the method, make it simple, apply to close. For the style, make the upper band to be color of your choice, lower band to be color of your choice, make it 4 pixel. After that, you click on save. For the next indicator, which is the relative strength index, click on the F icon on the main chart and search for your relative strength index. Make the period to be 1, apply to close. For the levels, click on this pen icon over here, make it 10, 90, 50, color of your choice, make it 4 pixel. And for the star over here, we don't really need it, make it color of your background. You can see that my own is black. I make it black, color of your choice. After that, you click on save. And for the last indicator, which is the moving average, click on the F icon on the indicators in this one and search for your moving average. Make the period to be 10, shift to be 0, method to be exponential, apply to close. For the star, make it color of your choice, 4 pixel. After that, you click on save. If you follow my settings correctly, your chart should look exactly as what is over here. So for the zoom level, you want to zoom in completely. This is where you want to be looking for your trade to the upside or to the downside. So what are you looking for? So first thing you want to pay attention to is this 90, 10 level and 50 level, which are acting as a support and resistance level. You can see over here, market reject from the 10 level, moves to the upside, test the 50 level, break below, come up again, retest it, go to the 90 level. So these are the 3 levels that you want to be paying attention to. You can look to cash trades at the 50 level, you can look to cash trades at the 10 level, but I will advise you focus more on the 10 level and the 90 level to cash your trades. This is a buy example over here. So first thing you want to see is market rallies to the downside. You can see this is a change in trend, enters into the 10 level. This is the 10 level. So once you have the entry, you want to be looking for a QMR, that is Quasimodo. So you have this low, you have this high, you have this low. So what do you want to first pay attention to is the high before you have the cross of these 2 envelopes. So with this entry model, you may not get entry all of the time, but most of the time you have it, it will surely plays out. You want to wait for the break of this high. So you can have the break of this high at this point. Immediately you have that, you can see how shopping market is. So in this run up move, you want to look for a fair value gap. You can search on what is fair value gap on YouTube or on Google, then you will understand what I mean by a fair value gap. But sometimes you may not even see the fair value gap. You can just enter your trade and it will plays out, but most of the times there is fair value gap, it plays out more. So you can see over here we have the break, we have a fair value gap, market comes to retest that fair value gap again. Your stop loss will be below here, and then your target will be, first target will be 50 and the second target will be 90. Consider you close some profit around this point and you close the rest around this point. And you can decide to just focus on targeting swing highs to the left instead of using the 90 or the 50 level. So you can see market rallies to the downside again and continues to move to the upside. So let me show you more examples. So this is another one over here. What do you see? We have a rally to the downside. So once you have that, you can see how it pushes into the 10 level. So at the 10 level, let's mark that out. So what do you see inside this box over here? So we have a run to the downside. So the high before we have this envelope is this one, but it is too far. So we can look for the high before we have a break. So we have a low, we trace, did not break this high, another low, then break of this high. So what do you see over here? We have a double bottom, which is a strong reversal sign. So once you have that, what do you see here? A fair value gap. After the break, have a retracement. Stop loss will be below here or here, but I would prefer to use here. Then you can see the market continues to rally to the upside, all from this level and over here before we have the fall. So let's use this area to explain how you can see a sell condition. So what do you see here? We have a rally to the upside, but the most important thing in this strategy is that QMR. You want to make sure that all the criteria are met in the QMR before you enter a trade. If not, you can see it touch this high and then it continues to move in an upside. So that entry is what will save you in taking losses. Although this strategy did not have a 100% win rate, you will take some losses, but most of the time you have a good run, you always recover back from those losses and then you make profit in return. So you can see entry into the 90 level, which is exactly at this level. So what do you see over here? Before we have this break, where is the low? The low is too far. You can see this low over here, which is the one before we have this break. So if you pay attention to this level, what do you see? We have a break, retracement, and then we have another break over here. So this is the low before we have this retracement, and the low is below these envelopes. Then we have a break. So once you have that break, what do you want to see? You want to see a retracement back into these fair value gaps. You can see these fair value gaps. If you go to higher time frame, it will be a single candle. Retracement into it, stop loss above here or above this level. Then the rest is history. You can see our market continues to fall to the downside, all from that level. You have a little drawdown and then it continues to fall. But if you can look carefully, it did not go above this high or this high. Then it falls to the downside. You can cash your TP at the 10 level or the 50 level, or you can look to the left to take your TP. It all depends on you. So basically, that is what I want to show you in this video. Like I said, this strategy works on the volatility index market, jump index, step index. You can also go back on those charts and check them for yourself. Also demonstrate it on your demo account. See if you can grow your demo account using a proper risk management and a reasonable lot size. So if you find this video helpful, don't forget to like this video, subscribe to this YouTube channel, turn on the notification bell so that you get notified anytime I release a new video. You can also check out my other videos that are displaying right now on your screen. Thanks for watching.